Let's get back to it. So this is for a strong growing company. In year one, let's say the share price is 100p, the earnings are 5p. The PE ratio is therefore 20. 20 times 5p is 100 pence. Then this is a fast growing company. It's not considered 20 for a fast growing company is not too bad. Let's say it goes up to 25. So 25 times earnings of 10p. It's suddenly gone up quite significantly. I mean, I'm exaggerating here a little bit, but let's just say that the earnings double, but the shares go up quite a bit, so it becomes quite expensive. The industry or maybe analysts have considered this to be a growth company, and therefore institutions have started investing and the share price has gone up. Maybe it's had press, etc. By year 3, this momentum is continuing. Let's say that the earnings are still going up significantly. Let's say they doubled again, which is, actually let's not say that, let's say they've gone up by 50%. And let's say it's gone up to 30 times. So, I mean, this kind of share would be going wild. So it won't have quite doubled, but it would have gone up by a lot. Now, what a lot of investors do is if they're investing in, I mean, this kind of company, obviously I've exaggerated a little bit, but if you're investing in this kind of company, if you, let's say you bought around here, let's say you bought at 300 pence. I'm sorry this is in UK currency, if it's dollars I'm sure you can work that out, but you could just convert that to dollars or whatever. But let's say you bought at 300 pence, and then when you see that it's hit up, it's hit 450 pence, you see that it's a PE of 30, and you think, Jesus, that's expensive. That's really expensive, considered expensive, especially if you don't understand valuations down the line. All you've seen is that it's gone up from 100 pence to 450. You see it's a new high. You see the PE is 30. Maybe you're thinking, well, the growth is slowing down slightly. It hasn't doubled. It's only gone up by 50%. And you think, well, you know what? I've made a fair amount here. I've made 50%, and that's good. Is it 50%? I think it is. Yeah, I've made 50% on my investment, and that's a good return. And you sell. And what happens? Well, if it's a good company and it's a growth company, it will continue to grow, hopefully. And what might happen is, let's say it continues to grow at 50%. So it's not growing at the same kind of earnings as it did once before, but let's just say it grows at 15%. So 15% would be 22.5 pence, and then 50% of that would be 33. I'm just going to round it. I rounded that down actually, but yeah. 49 pence, and let's just actually round that up to 50. That's easier. 50p, and then on year 7, let's quit at year 7. 75p. Now let's just say it goes down to 20 again, which is quite possible. 20 times those earnings would be for 450. Yeah, so it wouldn't have done anything there. But as you considered, if you consider yourself a long-term investor, then you start to see growth down the line. So then it's jumping up to 660 pence, and at 50, you're just going wild, aren't you? It's gone up to £10, and then from here it's gone up to £15. And this is what happens. In fact, almost exactly like this to me. This happened. I invested at 300 pence in a stock. No, sorry, I invested cumulatively over a period of time in a stock, gradually, and I saw my investment go up by about 50-60%, and I sold based on it being a PE of around 30, and I thought something like this happened, like it didn't increase for a year or something, and I thought, you know what, it's not doing anything, there's a recession, I'll sell, it's expensive, and then I'll rebuy it later, trying to do market timing. That's not a good example of how to use PEs. So this is where PE ratio can be misleading. If it's a good company here, and it has 1 or 2 years where maybe it doesn't grow so much, still stick with it, because unless the story changes, you shouldn't sell. Unless the story changes, you shouldn't sell, in my opinion. You can do what you want, but in my opinion, unless the story changes. And what do I mean by the story? Well, I mean the story of the business, the industry itself, in terms of the business, like the financials, the management, what's happening with them, the products or services, are they changing? If it's all stayed the same, you've got no reason to change. Just because the PE's changed, right, fine, PEs go up and down, but it's not necessarily the reason to sell, and it can be misleading. Okay, comment and subscribe, and yeah, I'll be posting some more videos like this.